What is going on, traders? Welcome back to Clover Trading. For those who do not know, my name is Kyle Williams, and just a couple weeks ago, I actually made over $70,000 trading Bed Bath & Beyond. And so
Hey, now, slow down, all right?
The fuck?
All right, get the fuck off my boat.
I'm sure we'll be seeing each other real soon.
I'm sure quite large win for me. It is not every day I am making $70,000 on a trade, really every week, every month. And I want to go into the trade. I want to go into detail because beyond just the money I've made, there's so many more factors about this trade that I think you could learn a lot from. And certainly that I have learned so much from over the past years of me trading, which is why it is like such an ideal setup for me, which was what led to me making $70,000. So let's jump right in. So BBBY, we have the daily chart here. And when I like to get into detailed with a trading setup, I always like to look for what factors are in my favor. Okay, now that doesn't mean I only look for factors in my favor. I also want to look for factors that are not in my favor, right? But the more factors that end up being in my favor and the more factors that are less in my favor really dictates how aggressive I'm going to be on a trade, okay? And so BBBY here, when it ran here and on this run up onto the right side here from, the ones all the way almost high as 6, as it was doing this, I was building that case, right? I was trying to see all the indicators that I was having, seeing all the things that were going for my favor, seeing all the things that were going to go against my favor, and ultimately I came to the conclusion that this thing almost has everything I want in my favor. So let's just go through those things before I even took the trade so you understand why and how I was so aggressive. One is it's a former runner, right? We saw it, just last year go from 5 all the way to 30. Not only was it a former runner, but we also saw once it was done running, it got crushed, right? It went all the way from 30 down to 10 in just a few days, okay? So we know it has the potential to crash very hard on the backside, okay? Secondly, it's also going to be bankrupt very soon, okay? It's not 100% likely. There is always a chance they can get out of it, but when it was running, it was very, very bleak, very, very likely. In fact, one of the theses is why this squeezed and this kind of ran from 1 to 6 in the first place is that everyone was already betting against it being bankrupt, right? Everyone was already shorting it, thinking it's toast, it's going to die. And then all of a sudden, I believe they put out an earnings report, and the earnings report was just slightly better than people expected. And what happens? Squeeze, okay? And so what I like to do, I like to short the short squeeze because once everyone has been kind of, squozen, just make up a word, once everyone's been squeezed out, the backside usually comes. And again, in given cases like BBBY, the backside can crash very, very quickly. Okay. So when we're having a perfect parabolic kind of daily chart, right? You kind of see this quick speed up every single day. There's more volume every single day. We're actually gapping up. We haven't even touched red at all every single day, right? You notice that how these gaps never actually touch the red-green level of the previous day, okay? That's also important because the very first time I see it go red, it's a big trend shift, right? I'm trying to find when has the squeeze stopped and when are there going to be reasons for longs to get out and sell, because that's what I need to profit on a short selling trade, right? All those factors kind of concluded. I wanted to be aggressive, okay? Normally, I'm willing to lose anywhere from like 3, 4, 5 grand on a trade. I knew that this trade was so good. I've seen examples like this before, even if you've looked up like HTZ back in COVID had actually got crushed, okay? Same thing. Everyone thought they were going bankrupt, and they were, right? But until they officially did, this thing squeezed from just under $1 all the way to high as 630, 620. So this was a kind of a mirror image of what I have seen before on HTZ. And so BBBY was kind of, again, a flashback. I was like, wow, I've seen this before. I know how this ends. I want to be aggressive. So back to BBBY. Like I said, I like risking 3, 4, 5 grand. Because I knew I wanted to be aggressive in here, I was willing to double, if not triple, that risk. Okay, I was willing to lose 10, 15, maybe even if the indicators were all right, I was willing to see a negative 20 grand P&L if I was wrong on this trade. As we jump into the intraday here, this day right here, okay, every candle here is 1 minute. This was the top day. This is the day it almost hit 6, okay, at 580. I remember actually taking a few losses, getting chopped around here because I also thought it might have been able to die. And actually, if we look at our chart, my charts here, I do have a picture of my trades. Here's that day, right? You see the same exact parabolic towards the end of the day. You see me getting short in the morning. I want to be aggressive. I think it's going to die. I quickly realize it's not going to die. Okay, you see me cover midday, give it a couple chances here, still also cover. Finally, we see kind of this blow off parabolic move. And again, I'm thinking all of these indicators in my head, all the things I listed in the beginning of this video, I'm thinking about where's the top going to be? And when it is in I want to be aggressive, you actually see me short this parabolic here in like the 560s. I thought to myself, if this is the top, why not risk it, right? Why not risk off this 590 level, okay, the high a day? If we never get there, I'll be looking to potentially add tomorrow. And if it gets over there, if it gaps over there, I'm willing to take a loss, right? At the end of the day, when we look at how high BBBY could go, right? If we go back to the daily chart here, how high could this really go? I mean, yeah, it could go over 7, it can go to 8. But again, I took size for me that I was willing to lose. I took size for me that knowing if worst case this thing gaps up again, this is just a starter position, and I actually might even re-attack after I cover. Generally, shorting overnight for me like that is risky, but I was willing to take that risk because 1, it was just a starter, and 2, like I said, a lot of bag holders overhead. A lot of volume just came in that day, just as much as the previous run, and can't even get close to near where the previous run took it, right? So that is kind of why I took that starter. So if we go back into the intraday here, I took my starter right into this parabolic, okay? And I was watching this in after hours. I said, if it can't kind of break out and go higher, I want to add right into the close of after hours. Again, still a starter size. I'm not like adding full size. I'm just adding a little bit more to enter that starter. And that's why you see this candle here. Right into the close. I see, okay, it's clearly weak. It looks like it's not going to gap up like it did in the previous days. Let's increase that starter just a little bit and hold it overnight. Again, if we gap over the highs, I'll just take the loss wherever it's at. I can accept that. So then we go into the next day. Next morning, pre-market starts here. We almost look like we're going to squeeze over it, okay? Finally, we actually fade and we crack, okay? This is the first time in this run-up that we have cracked like this pre-market. Again, the market hasn't even opened yet. All those days where it's gapped up, it has never gone red. It has continuously held green throughout the entire run-up in pre-market and after hours until right here. Until right here, okay? And so I knew that, okay? And like I said, all the indicators come together, putting them all together, I said, okay, if this is backside, 1, I need to look to place to add. I want to be aggressive. And if I wasn't even short from the previous day, where would I be adding? I want to get as close to red-green as possible. Now, the red-green level, I believe, when it closed, was about around, 523, 524, right around the 520s, okay? And it's no coincidence when you see in pre-market here, that's where also all these tops got topped out at, okay? Right at the red-green level. You see exactly, and that's where I'm adding, right? I'm adding right at this red-green level, okay? I actually downsized because I thought I was going to blow right through it, and it actually does go through it, and then fail. So I just reshort what I covered. I did not cover my full position here. Re-added what I covered, and out the open, we test it one more time and fail, okay? I cover some down at the lows, once into the first initial panic, just want to pay myself because I do expect some kind of bounce to come. We do see that bounce. You might ask me, why, Kyle, why am I adding in each pop? Why wouldn't I just save all my size for this final pop? And the truth is like, I don't really know that it was going to bounce this high. Okay, I just don't know that's how it's going to happen. So I kind of am taking small pieces with every new high with kind of the idea that a red green will hold, and it did. Again, it stayed true to its levels. It respected its levels, and before you know it, by the end of the day, we're actually fading even lower. I cover some more, and then I go to hold the rest overnight. Okay, the next day, we are actually down and gapping down again to as low as 320, and this is where I kind of screwed up. Right? If, as much as I made $70,000, I actually did screw up on this trade. If I didn't make this screw up, I probably could have made over 100. Okay. But what I did was it gaps down. Okay. I'm looking at the daily. I'm like, this thing's crushed. It was down, whatever, 20% or so. We're gapping down again. This thing should easily see below 3 today. Pre-market, we're at 320. The stock market opens. Okay, you see all this volume coming in. Initially, we pull, and all of a sudden, we just rip. And unfortunately, when it broke the highs here at 369, 370, right? If I zoom in here for you guys, right here, right? When it broke the new high day, I frankly should have just been covering. I should have been covering portions of it, if not all of it, just because I need to protect myself. It's already sold off so much. Why overstay my welcome? But again, I was aggressive. I was very convicted in the fact that this thing is going to die harshly like it did last time. I just need to be there for it. And unfortunately, I thought it was going to happen in just 1 or 2 days. Unfortunately, and in hindsight, it's easy to say, it ended up happening over a few more days, about a week longer than I expected, okay? So when it squeezed back here, I didn't cover any. right? And the only reason why is one, I was very convicted, like I said, but also two, I had a really good average to where I felt like it wasn't going to get back to it. Now, granted, it never did get back to my average. That's true. But here it shows where I made the true mistake. Okay. Squeeze all the way up to 450. Still don't cover. I don't cover anything, right? It's trading around all the rest of the day. I take it overnight again. Here's the next day. The next day, again, I'm thinking, oh, whatever, it's squeezed, it's still under, the key $5 level. My average is well over $5. It should be able to die, okay? And you notice the next day, it actually keeps going higher. It actually breaks these highs and then goes even higher than that once the market's open. And I completely second guess everything, right? I'm like, oh my gosh, the squeeze isn't done yet. I've already given back so many gains. Like, I need to protect myself, which again, in some cases is good. I just wish I had that thought down here at 370, not up here at 450, okay? And if you look at my trades here on this day, you'll see it. Again, the market opens. Just before open, I cover some, and then it opens and breaks those highs, and I cover the rest here. Again, because my average is above 5 and I'm covering in the 450s, 460s, I still end up making like 20, 24 grand on this cover after giving all that money back from the threes. Even being wrong, I still made money because I had such a good average. However, you then see it fail, okay? And you then see me re-enter, right? And so the reason why I did that is because once I had covered, I realized I'd made two mistakes, right? One, I made the mistake of I wasn't covering early enough, but now I was covering too late, okay? And when that happens sometimes, you realize that's the top, okay? And so that's why you did see me re-enter there. Once it had failed, I did re-enter in the 420s, especially after it kind of looked like it was going to break this low from the morning. It does that, it fades the rest of the day, and from here ends up being just a waiting game for me. Again, in hindsight, it's easy to say I didn't know that, but after, getting squeezed out, after having all the games play itself out, and after re-shorting, knowing the mistakes I made, I was able to make a better trade plan, not be so aggressive or greedy, or as aggressive. I still was aggressive nonetheless, but not so greedy. And I knew if the stock was ever going to stop working, I need to get out, right? And so we look at the daily chart here. We bounce. This green day was the day I didn't cover. Like I said, I should have covered at the 370s. It ends up going as high as 450 and then 470 the next day where I cut it. And then from there, you just see it fade. I end up actually covering on this day here when it broke 3. Again, my goal was $3. I just wanted 3. And again, I thought it was going to happen this day, like I said, before it actually ended up bouncing higher. It didn't get it. It took a few more days longer. So I end up covering at the 3s. You'll actually see my covers on this trade here. Same chart here. Again, like I said, reshort it in the 420s on this day. Took 3 more days, and before you know it, we're down to $3. Ultimately, after all that, I did end up making 40 or 70 grand. And yeah, it's all a numbers game, right? I could have shorted 4,000 shares and made 10 grand, or I shorted 40,000 shares and I made over 70, right? And that math's kind of off, right? But again, this is like a first red day setup. This is a huge squeeze, a huge kind of supernova. The traditional lifestyle of a penny stock, and I wanted to be part of the backside. And I put all those factors together. You see how I traded it, and I didn't even trade it perfect, right? But because it was so good, it ended up still working in my favor. Again, I made a couple mistakes, cost me some money, but I'm not going to complain making $70,000 versus 100, right? Either way, both are a tremendous amount of money. Couldn't be really happier to, have my account grow with that kind of a game. So anyways, hope you guys learned a lot. Again, this is my most ideal setup. It's why I wanted to go over. You can probably tell I'm passionate about this particular kind of play. I hope 2023 is filled of more of them, and I hope you learn how to trade them as well so we can all make money together. Okay? Thanks so much, guys. We will see you guys next time. Peace.